Hi, I'm Tracey Hanbury, one of the directors of the National Landlord Investment Show. I'm absolutely delighted that you've joined us today on the launch of our very new news portal, up-to-date interviews with industry expert, which is Landlord Investor Hour. Landlord Investor Hour will be brought to you every other Wednesday, and today I'm absolutely delighted that Acuity are our first people that we'll be interviewing. So who are Acuity? We've got Simon Howitt, who is the senior partner, and I'll be asking them a whole host of questions. Who are they? How they can help UK landlords? And what they can do for you. So sit back, relax, enjoy what's going to be an interesting hour of everything about tax and how that can help you as a UK landlord. So I'd love to introduce you to the team who are Acuity. This evening I'm joined with Simon, Phil and Chris. So what I'd like to know is who you are and why we're here.
Tracey, thank you for the introduction. We're so excited to be part of the Landlord show, midweek, 1 hour bi-weekly show, which is all very exciting. So we're going to spend the next hour with you. My name's Simon Howitt. I'm head of the tax property team here at Acuity. Been doing this since 2003. I'm also a landlord with 45 properties, so I get your world, believe you me. Here's Phil.
Thank you, Simon. My name is Phil Bryant. I'm the head of our financial planning team. I'm the head of our mortgage team, and I'm the head of our estate planning team. And we work very, very closely with Simon's team, with professional landlords, and offering very specific advice for that sector. And I've also brought one of my advisors. This is Chris.
Thanks, Phil. Yeah, I'm Chris Larby. I'm a financial advisor and very much involved in the financial planning aspect, working hand in hand with the accountancy team.
So thanks ever so much for introducing yourself, guys, and who Acuity are. I think one of the first questions that I'd like to start with is how you can actually help and how do you work with UK landlords? I think that's really important for our database and subscribers to understand how you can help them.
Tracey, great question. So Acuity Professional are in the top 200 of accountancy firms here in the UK. We have a head count of 300, which means we have lots of specialty teams dealing with specialty areas, such as property and landlords. The accountancy team that we have are a team of 30. They're a specialty team. They have about 75 years experience in dealing with landlords and developers. They've seen it all and they're highly valued by all our landlord clients. Then you have the tax property team, one of several tax teams. We specialise in landlords and property. So when you come to us, you'll be getting the best advice. Phil.
Thank you, Simon. So my team look after our clients from a financial planning perspective, and we're a whole of market chartered financial planning firm. I often tell clients that we look forward and plan, whereas the accountants tend to look back and report. And it's important that we're a whole of market offering, so we've got access to all the different providers that are out there. And of specific relevance today will be our mortgage offering, and we've really introduced that mortgage proposition to work with all of our professional landlord clients in Simon's team to ensure that the planning and the access to the right criteria and the right mortgage provider is available to them.
So when advising on mortgages and landlords in particular, one of the really crucial things is getting a full and comprehensive understanding of the corporate structure. So whether that's a limited company, mixed property partnership, or perhaps a combination, having a real detailed understanding of that is really useful working directly and gives us a distinct advantage working directly with Simon's tax planning team. As well with mortgages, having a real good knowledge of the nuances of the various providers is really key and allows us to provide a really effective service for our clients.
So there you go. We're starting to give you a flavour of the depth of professional services that we offer to landlords, and that's why landlords value what we do at Acuity so much. And I think it also sets us apart from other companies. No one has the breadth of services that we do. We're just about to start Acuity Legal in September, so we'll be doing conveyancing service and general legal services too. So gentlemen, thank you. I'm now going to talk about my favourite subject, which is tax. So now let's just take a deeper dive on tax. You know, since 2015, we've been helping landlords up and down the UK, probably over 4,000 now, with things like the landlord tax and inheritance tax and capital gains tax and stamp duty. You know, when you come and do our consultation, wherever you are, whatever your unique circumstances, we'll analyse it for you, and then we'll start to walk towards what's probably the best outcome from you and look at how we can serve and help you. I'm going to start with the end in mind. I'm going to start with inheritance tax. I call it the sleeping tax because it's the tax as you go to sleep finally, having built this amazing portfolio with a huge liability. Inheritance tax is at 40% on your equity. Someone's going to have to pay that tax unless you've put a good plan in place. And that's what we're going to talk about now. We're going to talk about the business succession trust. It's a solution we put in place that mitigates inheritance tax, but also stops future generations from losing out the valuable property assets you've built to two life events, divorce and bankruptcy. And that lasts in a trust for 150 years, giving great protection. Let's just have a look at a video about how the business succession trust works.
How could a business succession trust, a BST, help you? As a landlord, your property rental business does not qualify for business property relief, which means that your estate will be liable to pay 40% inheritance tax on the value of the business. This could result in it being difficult to pass the business on to the next generation in its current form, as properties in the portfolio may need to be sold to pay the inheritance tax costs. How does a BST work? A BST is made up of your company, shareholders, trustees. The company will be required to appoint a trustee who will help the company to administer the trust and distribute capital or income to the beneficiaries subject to normal taxation. It is important to note that beneficiaries cannot just take funds from the trust as and when they want, and the trustees will always be guided by your company. Potential beneficiaries. The BST is a discretionary trust, which means that past, present and future employees of the company, as well as their families, are potential beneficiaries of the trust. Protector. The personal entity that has the power to remove and appoint trustees, normally the company itself or a director. Once the BST is set up, the company's shareholders can gift the majority of their shares to the BST, anywhere between 51% and 100%. From a tax perspective, the BST benefits from a number of favourable statutory reliefs, which means that there is no capital gains tax triggered by any shares gifted to the BST. The value of any shares gifted to the BST is immediately outside of your estate for inheritance tax purposes. The gifted shares are not subject to the normal 7-year waiting period. The BST is not subject to 10-yearly inheritance tax charges. What impact will a BST have on running your company? As directors, there will be no change to how you manage the day-to-day activities of the company. The BST will hold the majority of the shares, and as none of the properties will be transferred to the BST, this means tenancies and finance can remain unchanged. In terms of income, you can continue to take dividend income, provided you keep some shares outside of the trust, or alternatively, you could take a salary and bonus, and we can advise you on this. Is a BST accepted by Hmrc? Yes, a BST is a well-established form of a UK discretionary trust, which has been used extensively by UK companies for many years. Am I eligible for a BST? To qualify for the tax benefits of a BST, you need to have a genuine property rental business with genuine employees. We can help you to work out if you are eligible and guide you through the process. Is gifting shares to your children during their lifetime an alternative solution to a BST? Yes, but gifting shares has some major drawbacks. 1. You will often have to pay a large capital gains tax bill on gifts. 2. The gifted shares take 7 years to be exempt from inheritance tax. 3. If you gift shares to children, these gifts are not protected from their potential divorce or if they run into financial difficulties. 4. You need to consider if you are ready to make such a large gift, as it will result in the loss of control and access to your dividend income. We can advise you on all aspects of setting up your BST and guide you through the process. We look forward to helping you.
So that was the Business Succession Trust. And for many people, that's an end destination, but they're not in a limited company today. If they are, then that's pretty straightforward. But if you're not, and that's some of the things that are really important to you, then we'll look about how we can get your journey to that point. So now I'm going to step back from that. I'm now going to look at things like Section 24, the landlord tax, the inability to use your mortgage interest against your rental income. And if you're a 40% taxpayer, or this makes you a 40% taxpayer, then that interest payment now turns into a tax charge. And of course that affects your numbers as a landlord, as a business owner. So we've had something that's been around now since 2013 called the Mixed Property Partnership. It's a really smart partnership. It deals instantly with issues such as Section 24 and has many other benefits. We're going to have a quick look at that now to see how that works.
What is a mixed property partnership? Our mixed property partnership is a unique commercial offering which utilises an LLP to mitigate the impact of Section 24 without the costs of transferring your property portfolio to a limited company. How does it work? The approach involves you and a limited company, also owned by you, forming an LLP, thereby creating a mixed property partnership, an MPP. The properties move from you, the individuals, to sit under the MPP. Rents, maintenance costs, and your drawings are also moved to the MPP. The mortgages move from you, the individual, to sit under and be the responsibility of the limited company. The MPP profits are split between you and your limited company. You remain the legal owner of all of your portfolio, and as such, AST's insurance and mortgages can remain in your name. What are the benefits of a mixed property partnership? Section 24 no longer applies to your portfolio because all mortgages will be the responsibility of the limited company. Any profits that go to the limited company will be taxed at 19% rather than the typical 40% for individuals. You avoid the fees and charges associated with incorporation, such as legal fees and valuation fees. It doesn't trigger SDLT or CGT. It allows the future transfer of the properties to a limited company. You can add family members to the business without incurring CGT or SDLT. Adding family members to the business may reduce inheritance tax. And finally, company car tax does not apply to LLPs, so you may be able to apportion a section of your car costs to the LLP, which may save you tax.
Now you've had a look at the mixed property partnership, and for some of you, you'll be thinking, do you know what, that sounds really interesting. Take a free consultation with us, details will come up later, and we'll talk to you about that. However, there'll be another group of you that go, actually, my main interest is I want to incorporate, I want to move all my assets to a limited company. And whilst you can go via the mixed property partnership route after 2 years, people want to go directly straight to incorporation, we can do that too as another option. And there are multiple reasons why you might want to do that. You might want to do it because actually, like the Business Succession Trust, that's driving you to a limited company. You might be doing it because actually you want all your assets in a limited company because you want the protection that limited liability brings with it. There are other drivers too. I would say that the people that look at incorporation tend to have a loan to value rate lower than 55% because it's quite expensive if you are higher than that actually going through the incorporation process. But let's explain how it works. It happens in two parts. Firstly, we arrange your affairs under an LLP and we trade like that for 2 years. Doesn't affect the ownership of your property, you're still the legal owner, doesn't affect the legal title, doesn't affect the insurance, and ASTs all remain in your name. However, the financial elements, the beneficial economic elements of that trade through the LLP for 2 years, the profits are shared by you and your partners or you and your family, and then you pay tax on that accordingly. But let's just go look at the LLP. We've done a little video for you here to explain how that works too.
What are the benefits of moving your property portfolio into an LLP? If you currently operate a buy-to-let portfolio in your personal name, then moving to a limited liability partnership, an LLP, may be the next stage in the evolution of your property business. So what are the benefits? When you move your portfolio into an LLP, it doesn't result in capital gains tax, CGT, or stamp duty land tax, SDLT. The LLP is a platform for converting your portfolio into a limited company in the future. You can add family members to the business without incurring CGT and SDLT, and this may also reduce inheritance tax. By consolidating your buy-to-let properties under one business wrapper, you may be able to access mortgages on a portfolio basis. And as an LLP, you will get limited liability protection, which means you are not personally responsible for the LLP's debts or any financial losses. How do you move your portfolio into an LLP? First, we create an LLP. Then we take your property portfolio and put it under the LLP. We then create an annual set of accounts for the LLP with all your outgoings, your maintenance, your drawings, and your rental incomings. We work closely with you throughout the process to ensure the LLP is structured to deliver on your long-term objectives, which could include the conversion into a limited company in a tax-efficient manner.
So now you've understood a bit more about how you operate for those 2 years under an LLP. So now let's look at the second part, or the second stage of the process, and that's moving from the LLP to a limited company of your choice that either exists today and you have properties in it, or we'll create a brand new limited company for you, all part of the service. There are many advantages to doing this whole process. There's no capital gains tax to pay or stamp duty when we transfer your portfolio to the limited company. It's all taken care of through the business transfer tax reliefs. Now then, some interesting things. If you bought properties at this price and your mortgages now exceed the value of those properties, you will suffer something called latent gains, and we need to look at that way before looking at if incorporation is the right route for you. Okay? If that isn't the case, then incorporation is open to you without taking on further tax burdens. So one of the things I like about incorporation is that if you bought a house for 100,000, it's now worth £500,000 at the point at which we move it into the limited company. It'll sit on the balance sheet of the limited company at £500,000. Should you then choose to sell that property that's valued at £500,000, you will only pay corporation tax, 19%, on any gain above the £500,000 and not going back to the 100,000. So that has a huge, huge advantage to some people. If you're looking to sell, or if you're looking to change some of your portfolio because it doesn't work or the numbers don't work for you. So we'll just now take a look at the incorporation process stage 2, and we'll just go look at the video to explain how that works.
What are the benefits of moving your property portfolio into a limited company? You only need to pay 19% corporation tax on rental profits and capital gains, rather than the typical 40% rate for individuals. Section 24 does not apply. You get limited liability protection, which should mean that you are not personally responsible for the debts and any financial losses of the limited company. It provides a platform for inheritance planning. You can access mortgages at a higher loan-to-value ratio. So why haven't all landlords transferred their property portfolios into a limited company? If you transfer your property portfolio into a limited company, you will normally have to pay capital gains tax, CGT, and stamp duty land tax, SDLT, but there is a way around this. If your property portfolio operates as a business and sits in a partnership or an LLP, then you should be able to transfer your property portfolio into a limited company without CGT and SDLT. How can we do this? The property business, including the property portfolio and mortgages, are transferred to the limited company in exchange for shares. This means you don't have to pay CGT until the shares in the company are sold, and you don't have to pay SDLT. How can we help you through this process? We structure the business transfer to fall within the rules for CGT relief and the special SDLT treatment. We liaise with your legal representatives to ensure that the SDLT returns and property transfer documents are structured appropriately. We review the relevant financial statements and tax returns to ensure that the filings adequately reflect the transactions. If Section 24 is your main reason for incorporating, and you are concerned with the associated legal and valuation costs, you may wish to consider a mixed property partnership. This is explained in our next video.
So now we've looked at 3 big options for you in tax planning. There are lots more too, so just come and talk to us, take up the free consultation, spend an hour with us, it's all free, and you'll get massive value for it, and then we'll do a report for you that you can look at and understand your options and how that works. So now we've got all this part kind of nailed down. The next part that everyone wants to talk to us about is mortgages and my financial strategy. And that's where Phil and his team come in to then help you get that part of your overall plan sorted.
So Simon's spoken to you today with regards to the tax planning solutions that we have. And one of the really unique advantages that Acuity as a company has is that it's got a very joined up approach to planning. And we're able to bring together a lot of different kind of financial disciplines to ensure that we know all the relevant information for a client and can make the most appropriate recommendations. So with regards to financing, it's again potentially looking at the accounting side, knowing the information, the profit, the loss, the income, the assets, and knowing what criteria that can then reach with regards to the mortgage solutions. So moving on from financing, I just want to touch upon estate planning because it's a team within our firm which adds a significant amount of value to our property clients because what we've essentially done with regards to the tax planning is create wealth. And once we've created wealth for our clients, it's then really important for us to protect that wealth, which is why the estate planning team will make the most appropriate recommendations for wills, trusts, be they personal trusts or business trusts or combinations thereof, to ensure that assets are passed through generations in the most tax efficient and succinct way. I'd like to pass on to Chris, who can talk about how a client has access to a slightly different suite of planning because they now have corporate structures, and having that corporate structure, it allows us as advisors and the client to actually access much more tax efficient and flexible planning. So I'll just pass over to Chris to talk to you about that now.
Thanks, Phil. So having the corporate structure in place really presents some excellent planning opportunities. Now, pension contributions often overlooked, but they're actually an excellent way of just paying yourself in a different way to, say, dividends and salary. Particularly if you're close to or over 55, the pension is just as accessible as any other form of payment. One other excellent planning opportunity, which is a business expense as well, is relevant life cover. So a form of life assurance to protect yourself, your loved ones, that can be run and paid through by the business as a business expense. So if any of this is of interest to you, please feel free to book a consultation with us. We're very happy to talk to you about it in detail.
Thanks ever so much for that. So on to the next thing really. Acuity are offering an amazing sort of free consultation and report at the moment, which is over the value of over £2,000. Could you explain how our UK landlords can get access to having that report and consultation with yourselves?
So we've been talking about a free consultation. You'll see a slide that comes up now. So part of being subscribed to this Landlord 1 hour briefing, you get to have a free consultation with me and the wider team about you and your unique circumstances. So on the slide, if you want to get your cameras out now and take a picture, you'll see our telephone number and our email address coming up on the slide. Take those down, you can phone in and speak to the team, they're waiting for you to call us, or you can send an email with your details. The admin team will then book in a time convenient to you where you'll do a Zoom call with us. We'll take you on a journey and a process. We'll look at your numbers, we'll ask you for some information, and then from that we'll create a report that you'll be able to look at and understand, and we'll walk you through that. Either way, you'll find it an enjoyable journey. It's probably worth around £2,000, so please take us up on the free consultation. We all look forward to seeing you online quite soon.
So Simon, what makes Acuity very different from other companies?
So great question, Tracy. What makes us different? At Acuity, as you've already heard, big team, lots of specialists. And when we have lots of specialists, we can offer the best advice, all under one roof. That's pretty unique in the UK market when it comes to tax and accountancy advice. Normally they have separated functions, or they have front companies, or they're one-man bands, or they don't offer all the services. We offer everything. Number two, we only offer tried and tested solutions, sensible, low-risk solutions, well thought out, compliant with all tax laws. And we're so confident on our past experience, on our track record, we even offer a guarantee in that to give you peace of mind.
Can I ask why landlords choose you?
So why do people choose Acuity? Why do landlords choose Acuity? I think it's quite simple. They come to us because over time they build up trust that we're going to deliver sensible, tried and test solutions, number one. Number two, they can spread their fees at 0% over 12 months and there's no imprint made on their credit record whatsoever. And then finally, because we spend so much time understanding your unique circumstances through our free consultation, and then we walk together to show you your options, and you often self-select on that journey as the right option going forward. And then it's about how we deliver that service to you over the coming months. And I think also to add to that depth of specialists that we have here in our team, that you've got your mortgage broker, you've got your legal team, you've got your tax team, you've got your accounting team, all who work together, all who understand what's going on with you to deliver the very best professional services I think you can probably buy today.
So there we have it, our first ever Landlord Investor Hour. Thank you so much for joining us this evening, and thank you to Acuity, to Simon, to Phil and to Chris. We've had an insight of information, expert advice on all aspects of tax planning, wealth management, insurance, pensions, really everything that you need to know about your tax planning future and your safeguarding as a landlord, and actually what Acuity can do for you and your business. So thank you so much. We hope to see you on the next one, and thank you for subscribing, and thank you again to the team here at Acuity today.